global economic news. Please note that this video, including example images and references, is only for educational purposes. All information gained is from our own internet research. Today, we are bringing you a special report on the Austrian economy. Joining our broadcast today is our news presenter Aisya, our analyst Najwa, our news reporter Puteri, and our special guest expert Fickry. Let's begin. Austria, located in Central Europe, is a highly developed nation characterized by a prosperous and stable high-income social market economy. With a population of approximately 9 million people, its highly educated and productive labor force underpin a high standard of living. Austria boasts a high GDP per capita, positioning it among the wealthiest economies in the European Union. The economy is primarily driven by a robust service sector, including international tourism and finance, supported by advanced manufacturing and a highly mechanized agriculture sector. To dive deeper into the country wealth, I will hand it over to our lead analyst, Najwa. Over to you, Najwa.
Thank you, Iman. To understand Australia economy, we compare national income based on three approaches. We begin with the production approach. The tertiary or services sector remains the undisputed backbone of the Australian economy, projected to expand steadily to a commanding €342.1 million by 2026. However, while the industrial sector holds relatively flat at around €124 million, overall nominal GDP growth is flashing a cooling trend, decelerating from a post-pandemic high of 6.3 million in 2023 down to a forecasted 3.1% by the end of 2026. Shifting over to the income distribution side, in the primary engine behind nominal growth has historically been the compensation of employees. Thus, its momentum visibly moderates after 2024. In a significant turnaround, however, corporate profitability, measured here as the gross operating surplus, is officially projected to bounce back into positive territory starting last year, successfully reversing consecutive contraction recorded in 2023 and 2024. Finally, the expenditure breakdown in provides a clear visual of the resilient real GDP recovery. Following a grueling downturn in 2023 and 2024 brought on by sharp contraction in fixed capital formation and weak export volume, the medium-term outlook looks promising, driven by an aggressive resurgence in global exports and stabilizing domestic investment. The economy is poised for a balanced rebound through 2026. In short, the data underscores an economy successfully navigating post-crisis volatility and steering towards sustainable growth. These findings help us understand the foundation of Australia's nominal GDP growth from 2023 to 2026. Back to you in the studio, Imani.
Thank you, Najwa. Despite its strong economy, Austria faces global challenges. To explain this further, I would like to invite our guest speaker, Fickry. Fickry, what are the current issues affecting Austria?
Thank you, Iman. Let's look at two main issues. First, what is inflation? It is a problem where price rise. In Austria, the annual inflation rate rose to 3.7% in May 2026, primarily driven by higher service inflation, including airline ticket prices and costs for industrial goods. Second, what is unemployment? It occurs when people lose jobs. Austria experienced significant change here. After a strong recovery in 2022, the unemployment rate increased slightly to 5.44% in 2024. This was mainly due to slower economic growth in Europe, weaker industrial performance, and high inflation. To understand how the government responds to these challenges, let's hear from our news reporter Puteri.
Thank you, Binti. To manage the rising inflation you just mentioned, the government implements key policies. They use contractionary monetary policy, where the central bank takes action to control money supply and increase higher interest rates to reduce borrowing and spending, helping to slow down inflation. Additionally, they apply contractionary fiscal policy, which involves government decisions regarding taxation and public spending to ease inflationary pressures and support households. That is all from my end. I will now hand it over to our next news presenter, Aisya, to explain the strategies for unemployment.
Thank you, Puteri. Meanwhile, to pull the economy out of a recession and tackle unemployment, the Austrian federal government uses expansionary fiscal policy. By increasing government expenditure to fund large-scale public development projects, they create immediate jobs. Decreasing taxations also leaves firms with higher profit margins to expand operations and hire more workers. Furthermore, the European Central Bank applies expansionary monetary policy by lowering interest rates, reducing statutory reserve requirement to increase the money supply, making credit cheaper for businesses to finance capital expansion. In conclusion, Austria demonstrates a resilient economic framework supported by these monetary and fiscal policies to combat inflation and unemployment. That concludes our Global Economic News Report. Thank you for watching.